the idea of tokenization immediately comes to mind that liquidity is a guarantee. The security token offerings and tokenization really will win out in the future because the incentives are aligned. There's so many other benefits that come with that. We will continue to have the BlackRock moments, and that's when retail and other people will come in and realize that they can actually have access to these offerings, some of them through fractional aspects and democratization.
Dear listeners, community, and professional market players, we are welcoming you to the Stobox YouTube interview session, and we are hosting today with my good friend and partner, Gene Deev, a co-founder and CEO at Stobox. And today we have a very special guest, Travis John, a founder of RWA Builders, one of the leading tokenization voices, advisory, and business development company. Hi, Travis.
Hey, Ross. Great to see you again. Gene?
Hello. Thank you, Ross, for the introduction. It's a pleasure and great to see you, Travis, here.
Thank you.
Yeah,
Thanks for having me.
Travis. Thank you, Travis, for being here. I'm sure that it will be very insightful interview for our listeners and for our followers about their development of real-world assets and tokenization industry. So my first question would be, can you share, please, the origin story of the RWA Builders? What motivated you to dive into the tokenization of real-world assets? Because I know with your extensive experience in traditional real estate, what inspired you to shift focus towards the education and promotion of tokenization and real-world assets?
Yeah, that's a great question. I would consider myself a pretty typical entrepreneur, which means there's a pretty non-traditional path of how we got to where we are today. But, overall, I've spent a lot of time in traditional businesses, and I think we find many people that are in the tokenization side of things. We're in traditional businesses, but there's always been this underlying technology aspect to everything I've been doing in my career. And I just have always had this future vision. I've always just had this ability to kind of see the future in that kind of technology landscape. And I've been active in the blockchain space for over 4 years. Led me to RWA Builders and I've been doing this for about 6 months full time with RWA Builders. Really just went full steam into tokenization. And what led me to that essentially was, a lot of the culmination of events and, just from my own experiences of seeing the market and seeing where we're going. And I'm not a spring chicken, not a young dude. So I really see this as my final chapter of, a few decades worth of tokenization. And I just felt like this was the time to really commit. And I know it's still early, but I think it's the right time in a lot of cases. So I formed RWA Builders around a lot of the same methodologies that work for me in my traditional businesses, whether it was running a real estate portfolio or running e-com businesses, doing go-to-market strategies, business dev. All the things overarching, I'd say it comes down to two things. I spent a lot of time in tech-related businesses and helping them grow. And this is really no different with tokenization. It's a technology that's being, obviously, as you guys know, it's being used to evolve the financial infrastructure. And I just see this as just such a natural progression of our industry. And I'm excited to do that. RWA Builders is our commitment is to be a distribution model. It's to work with teams like yourself and start up early stage companies that are looking to have a voice, have a way to get into it.
Yeah, I would like to comment that saying that we're in the market for the last 6 years, and recently it became obvious not only from our own vision, but the market starts saying that one day all of the assets will be tokenized. So if we have this in mind, and you saying that that's the kind of last chapter for the last 10, 20 years, I'm sure that we'll have a very long working life because there's a lot to tokenize and there's a big path to go. So we're kind of sitting on the kind of fast train, but there's so much to be done. And it's actually great that we all are in the boat of RWA at this stage of building the industry itself. I mean, it never was here, now it exists, and now we see and we're talking about it. So yeah, that's good that we're talking about a long business life. Please,
100%.
Ross.
Yes, exactly, Jean, and thank you for mentioning it. And to continue our conversation, as you correct mentioned, that security token offerings, STOs, offer new opportunities for raising capital, but they also come with unique challenges. So, Travis, what are the key challenges you see in marketing of STOs, and what maybe strategies do you recommend to overcoming them?
Yeah, and I think the STOs, that's a great point. And, I think it's worth noting that obviously, like as Gene mentioned, and you guys have been doing this for 6 years, so RWA wasn't an acronym then. STO was the acronym. I think RWA is going to stick, and, certainly hats off to you guys blazing those trails early on that, so you know the answer to this question even more so than I do about the difficulty selling STOs. But I'd say just taking my take on right now in the current environment, and clearly some of it's, we won't spend too much time, at least in this question, about regulatory, but I mean, that's certainly one aspect of it, is the regulatory issues around STOs. But I'll just address this more from the aspect of a lot of times STOs, I'd say it requires a little bit of a mature buyer. I guess let's just start there. I think what I've realized is many of these things, again, I love new tech. I get super excited about it. I'm an entrepreneur. I want everyone to believe what I believe and to come on board. Naturally, that's not how it works. And a lot of investors are very stuck in their ways. They're very traditional. And when they hear about an offering that might be a security token offering, it requires a lot more education, a lot more context. So I think a lot of, this isn't a sexy answer, but I think and you guys are committing to education as well. But I think a lot of this has to do with just educating the people that are already predisposed to want to invest in security tokens. I do believe in the future of democratization, fractionalization, all the things that come with that. That's even a harder and deeper conversation, which I know we're all on this call are committed to that. And we're every day working on education and focusing on that. But I think one of the biggest things is we've seen a big institutional push. We, can't have a podcast without talking about BlackRock and some of the things happened there. I think where the next steps are is educating the institutional folks, which we're doing. On my side, I'm focusing heavily on that, of how increased liquidity can happen. It's not a given. It's an opportunity if there's liquidity and there's a market for it. But I think that's, we could talk all day about all these aspects that could hold up STOs, but I think those are the main things, is just how do we find the people that are predisposed, frequency and recency, like people that are already investing in security offerings, and how do we get them to understand the benefits and align them with those incentives? Because we will continue to have the BlackRock moments, and that's when retail and other people will come in and realize that they can actually have access to these offerings, some of them, through fractional aspects and democratization.
Yeah. Anyway, my point is the product design is very much important at the whole adoption stage, because whenever you take the early concepts are always difficult to adopt, to use. It took 10 years for email to get more or less adopted. So we, with the Web3 wallets, with the whole concepts of Web3, with the concept of MetaMask and the gas payments and so on, people have to get around with this. So I'm sure that's, that cigar is being smoked from two sides. The products are shifting towards people, and people are shifting towards Web3. So that's another very important, I think, point of adoption is how people are easy using the Web3 technologies with the tokenized asset that we're talking about. Ross, are you with us, my friend?
Yes, exactly. I'm here.
The connection is being restored. Perfect.
Yes, thank you, Travis and Jean, for your insights. And I have very interesting topic for our next discussion. So what are the most significant misconceptions and knowledge gaps do you see in the industry when it comes to tokenization and real world assets? Because I know that industry is developing, right? And because of their new adoption of new investors, I see that a part of them have some misconceptions about the real world assets and how it works. So what do you think, Travis?
Yeah, I'm sure Gene has some good context on this too, but I'd say like just the first thing that comes to mind is, and I noted this a little bit on the last answer, is that liquidity. I mean, a lot of times the idea of tokenization immediately comes to mind that liquidity is a guarantee. But you know, that, as you know, it's not even remotely the case. If there's not liquidity in the market already for that, or there's not demand for that existing security already, just adding tokenization doesn't, in most cases, help it at all. In many cases, it could even diminish its existing value, the traditional side of the value. So I think that's one of the biggest misconceptions, frankly. I mean, there's several, but I'd say that that's probably the biggest, and that clearly is being addressed, and we're seeing that, and I don't see that as a reason that tokenization would fail. It's just a matter of picking, as Gene mentioned, a lot of right now we're finding that meeting point of consumer adoption that's coming from one side of Web3, and the product developers like yourself at Stobox, like, that are making the products that are helping this easier to come together. Those synergies are going to continue to make that liquidity issue significantly less, because you'll have more people that are able to do that. But I think just on the surface, that's one of the biggest things when I talk to early stage companies is tokenization. I like to liken this just because I spent a lot of time in the growth arena. I liken this to a new sales channel. It's kind of like adding, Facebook or Google to your business, for example, or Twitter. It's like tokenization is just another channel. Like, if your existing business is not working and you're not profitable right now, adding tokenization just because you think you're going to make more money is not the way to do it. So I just always that's the way I like to think about it, is like, it's another marketing channel. It's a way that you can tap into another market, but you need to make sure your existing market has a foundation that's already working.
No, you're very right, Travis. I absolutely agree. I think also the big misconception would be expectations, because businesses expect whatever they put on the chain somehow has to be very popular and be kind of have that boom effect on the whole unknown for them Web3 community people. So they have the expectations of something great happening. At the same time, crypto guys expect issuers to be very concrete in what they're offering. And what you see now is more, vaguely you see the touch of the legal essence in most of the projects, but the people have some expectations. So I think this missed expectations from both, from all of the sides is something that we stand at this moment. So we have to kind of relax, start breathing, and see what we're having. For businesses, it's not that difficult to tokenize, but what is to expect? You have to expect decency, exactly what you say. So the market has to, come to reality, and we have to understand what are the expectations from tokenization. It's not a miracle, right? It's an absolutely distinct, understandable technology, and you're perfectly correct. If your business doesn't work, it's not going to work with tokenization, right? So that's it. So I think expectations would be a big misconception in the whole industry.
Yeah, I'll add to that real quick, and I'll let you go, Ross. I think the other thing that is quite obvious, and you noted to that, Gene, is it's kind of ironic, but it's almost the barbell effect. But tokenization, and why we see RWAs being like the narrative that's, and I don't love this concept, but the narrative that's as second to meme coins, for example. And as you mentioned, Gene, I think tokenization is actually like the crypto bros. They want yield. They want like good, guaranteed, concrete opportunities. Like, if they want to gamble, you can go buy a meme coin. But when it comes to tokenization, boring's good. I think that's the myth too. Yeah. Like you said, like you exactly said it. It's like a lot of people think like, oh, this tokenization thing has to be like this whiz bang, wild, Trump with hat type of thing, or some crazy thing. It's like, no, like treasury bills and stable coins are the sexiest thing right now in tokenization, and they're unsexy, they're boring, but they provide a yield, they're working, they're legally structured the correct way, and you have verified guaranteed yields that are coming back. So I do agree. Like, there's a big myth too from people on the outside thinking it needs to be some whiz bang exciting idea.
I would also add on this is that few people look how tokenization can evolve a business model itself. Now you may have a security with, let's say, a timeshare right, because you can have a mixed assets classes within a token, which was impossible with a traditional kind of security place. You own a company in the form of a share, but now that token somehow gives you the right to use the premises of that hotel, for example, of the tokenized. Or you can have a right. So there's a combination of utilities, rights, and the securities part can be looked as a new business model that only can be available through tokenization. And a lot of people just look, okay, so let's tokenize the T-bills or tokenization of traditional CeFi, but it's not only, it's the creation of new business models which were never here before. And this is a very interesting, type of way of thinking, how we can use the technology to upgrade the business rather than just to use the same ideology behind.
Yeah, I'll add to that real quick is, like you said, like, I know you have a large portfolio of real estate. I love the real estate side of tokenization. And that is a perfect example of that, where you can own the share of that real property, but then you can also, for example, as a timeshare type of vacation rental, Airbnb, you could then have vacation credits and utilize that as an aspect of it, which changes, the why Web3 incentives and why the security token offerings and tokenization really will win out in the future, because the incentives are aligned. There's so many other benefits that come with that. And like you said, there's layers of benefits. It's not just singular and surface level.
Exactly, and it is a completely different level of engagement of your customers, of your investors, of your community, as you, Travis, mentioned, with a timeshare of staying in this real estate and get some points that you can utilize them. So it's completely changing, as Jin mentioned also correctly, the business model, because you become a community-driven businesses. And thank you, guys. Thank you, Travis and Jin, for the insight that one of the biggest misconceptions it is that the clients or traditional companies thinking that tokenization, it is like their bottom money, right? Where you tokenize yourself and you will see some miracle. It is a hard work. You need to promote your business. You need to build your community, right? Distribute the content about your activities. So it is a big piece of work. And already we discussed their more traditional companies and their misconceptions and their vision. But how do you see the traditional financial institution responding to the rise of tokenization, Travis?
I've been absolutely blown away with the interest level. Of course, not all of these companies are making these statements public, clearly, but as we'll get into, I mean, we're obviously talking to a lot of traditional finance people on my side of the business, as you guys are, and I'd say it's the demand and the interest and the conversations, kind of behind the scenes are very vibrant, very active, and that's what makes me so excited about where the future is going, because at the end of the day, I think that is the first mover here. Is it's continuation of institutional and bridging those gaps, as Gene mentioned earlier, of Web3 and all of the things that are happening for bringing consumers into the fold. But I think the wave that we're seeing in this cycle has been quite odd and interesting to watch play out and be part of. It's been a lot more of an institutional type of thing, which is why Bitcoin has been more, leading the conversation. ETFs have been leading the conversation, and a lot of the financial institutions are just they're essentially in the back room putting the X's and O's on the whiteboard right now, and they're figuring out, okay, where are we deploying capital, how are we going to do it, and what makes the most sense for step one for us. And we're seeing that. We're having those conversations every day, and our event that's coming up in a few months in October at the permissionless art called RWA Day, we specifically are focusing heavily on traditional finance clientele there. So, that's been the feedback I've been getting, is they really want access to meet other tokenizers, have funds, get together and learn. And there's just an insatiable interest to learn right now and meet people virtually and in person to essentially break bread and figure out, how to work together.
I will just add that if you, from the news noise that were surrounded, if you just highlight the news saying that BlackRock pushes their fund on Ethereum blockchain, just only this will give you kind of a straight see-through a number of very important points. First of all, it's like one of the biggest funds now deploying capital on the blockchain. They do it publicly, which is kind of, they tested the whole technology. They do it on Ethereum, which is a public blockchain. They use it with the gas, which is kind of an asset is not maybe cleared for US tax nuances. Like, how would you treat gas as an Ethereum asset on your balance sheet, right? So how does that report to IRS, for example? So there's a lot of things which are not maybe clear at the moment, but just that the fact that the BlackRock has done it already gives a huge positive sign to the whole of the financial, and we're talking about the regulated financial industry, institutional guys, just to look at this. And if we took another piece of statistics, the S&P 500 companies, it's around 70%, I might be mistaken, like 60 something, but 70% have the plans to adopt blockchain by 2030. So just having these two bits together, you see, okay, the public blockchain, the funds, and the adoption is just in the air, and it has to be, and it will be just rendered regardless. So I see a full green light, on the whole technology, on the whole sector, on the whole industry.
I totally agree. Yeah. And like you said, Ondo's doing it. They just surpassed BlackRock, and all of these use cases that are...
Did they? Ondo has surpassed, right?
Yeah.
Ondo has surpassed BlackRock. Well done for them.
Yeah, just as of a couple days ago. So so that's a big deal. And, so there's obviously the race is on. Obviously they work together as well. So it's not like they're necessarily purposely competing, but they have their own partnerships anyway. But what I think is interesting is the public blockchain aspect that you mentioned. That goes back to what we all know on this call, is that liquidity is the key. So not only is transparency, decentralization, all of these things like why we're in the business, but you can't always count on BlackRock or other companies to believe in the ethos of decentralization, or, not all of them do, which is why permissioned chains and things are still a thing. But I think where we're continuing to see that movement is as we continue to have regulation work for DeFi being bolted onto BlackRock or Ondo, those settlements and liquidity on a public blockchain, particularly like Ethereum, which has the most liquidity of any, as you guys know, like that's really why the public blockchain wins out. There's plenty of proofs that you can, and ZK rollups and proofs and all kinds of things you can do if you want to hide, as you guys know, PI data, personal information and things like that. So there's plenty of ways to do that. But the use case for a public blockchain is becoming very clear. And like we talked about, the big names are already proving that concept for us.
Yeah, absolutely. And there's one other aspect that I look at this is the number of technological commitments. If you look at the whatever framework that you would like to build a DeFi, which is decentralized finance concept, you're going to take either the public or the private, and where there will be more progress, where will be the more, technological expansion, obviously on the public side, because people commit, people adopt, and this is how the whole market grows. So it's, when you look at this both, where shall I stake? Of course, the public blockchains will make more sense. Just besides the rest, just through the speed of the development and what we see now, amazing protocols, amazing KYC, KYB data, compliance. So now we did a lot of things using the knowledge of our successors. So that's definitely different angles to look at. But yeah.
Exactly.
Well said.
And I think that a big part of the institutional players, they missed the developments of tokenization and real world assets. Of course, we have the BlackRock as a benchmark, but I think that more than 60-70% from all of the banks or all of the financial institutions, they are they're not they're really old, right? And they still need the modernization, and they missed the development of some technical solutions or services in tokenization. And that's why it is a great basement for RWA builders, right, for Stobox, to bridge this gap of their education, of the service, or some technology providing. Because I see that currently more and more institutional grade clients and institutions will join tokenization, and we just in the beginning.
Yeah, I mean, I wrote an article recently for the Provenance blockchain, and we just released it called Tokenization 101, and I talked about a lot of these aspects in there where the adoption of the market and just kind of like how that works together. But I think with tokenization as a whole, how we're seeing people use the public blockchain, it just becomes more and more apparent that that's where the demand is, that's where liquidity is, and that's where the future will happen. And I made a point in the article that the finance industry is one of the few industries that has a specific division called fintech. So like you think of it, all these other businesses, like it started like, you hear prop tech and you hear things like that, but all of these like tech precursors, or suffixes that have added to prop tech and other things were all adopted from fintech, because fintech was really the first point of the financial industry, even though it is outdated in many ways and needs upgrading, like you mentioned, Ross. One of the most important things, there's always been this underlying entrepreneurial interest to upgrade it. It's just that some things in the financial industry, because of regulations, they just don't move quick enough, clearly. Blockchain is, I think, that moment. It's that internet moment. It's the iPhone moment, whatever you want to say. Blockchain is that moment where financial institutions are saying, look, this isn't just a fintech moment where we're going to bolt on some extra SaaS things or APIs. We're going hardcore. So I think that's where, that's again, going back to my original answer of why I did this. I really see this evolution of, this is no longer that fintech buffer. They're literally going all in on blockchain. Now, of course, incrementally, but I mean, I believe internally they realize that this is the next stage of the internet.
Exactly. Thank you for your insights. And because I know you have professional knowledge and big traction in the real estate, so how do you think tokenization will impact the traditional real estate markets over the next decade? And what challenges should their industry professional anticipate?
Oh, massive. I mean, my wife is a managing broker in the state of Florida for eXp Realty, which is, has over 20,000 real estate agents just in the state of Florida. So it's a very large, one of the largest companies in the world, for agent size. And, so I'm constantly talking to her about it too. And I constantly stay connected because of my background in real estate. I would say from a real estate professional standpoint, whether you're a title agency or you're a real estate professional, everything going forward, again, it's slow at first and then all at once, but all of these tokenization things, I see all of these, and I see this being essentially how all property will be transacting in the future, whether you're looking to get equity out of your property or you're looking to sell a property. I believe all of this will distill back down to what's on the blockchain, fractionalization, and liquidity as it continues to build within the real estate sector. And you guys know from Landshare and companies I work with as well on the real estate side, liquidity is the key, interest is the key. But as you start getting that momentum and that ball starts rolling downhill, and you start seeing hundreds, your first 10 and then your first 20, then you're over 100 properties on chain, that liquidity profile cannot be dismissed. And that's really where I see real estate professionals and investors and anyone that's looking to continue to win in the real estate sector, which is one of the no doubt about it, one of the best sectors to invest in all of our lifetimes. But you do need to understand where this tech is stepping in and where you can, because it's going to be a lot easier to invest in the future. It's going to be a lot easier to get yields, and you don't always necessarily have to be a landlord. You can buy fractional shares. So I see there's a lot to say here, of course, but I'll leave it at that. But I am excited about the future. I think anybody that's in, I tell all of the companies. I mean, I talked to just Proppy yesterday, as a matter of fact, and I tell any of the people that are in real estate to tap into to the people that are leading this, whether it's Stobox, what we're talking about, other industry tokenizers in the real estate space that are providing platforms for real estate professionals and people in the business and investors to learn and to not miss out on the next phase of real estate. I mean, I literally see this as the next phase of real estate. Like, I don't see this as, again, like we talked about, it's a sales channel right now. It's just like the Facebook or the Google, like I mentioned earlier, but it will be ultimately the platform where all real estate is transacted, in my opinion.
I would also, guys, add that it gives an additional depth, and it's not just micro, but it's also a macro depth of the whole transformation, because basically what's happening is you take the most illiquid asset, which is a real estate, that's on the balance sheet of your company, right? And then you have it on somewhere in your books as an illiquid asset. And somehow there is a process called tokenization that actually puts it to the most liquid asset, like cash, for example, with the liquidity being in place. So that's just one example. But if you mass adopt that example and that case, you will see that there's trillions of dollars around the world of assets being locked somewhere in the paper-based securities ledgers, where people are finding difficult to manage these things. When I talk about manage, is buy and sell and trade in a manner as public companies are being traded, for example. So now you actually have that enormous amount of capital that is on the books are illiquid assets being pushed as a liquid. So imagine how much frequency you just create, an economic output that you create, because people start trading this, and it starts behaving as an asset as it's supposed to be, right? It's a liquid asset, which gives a great opportunity. So for all of the industry, for all of the participants, real estate owners, people who support this, investors, builders, developers, everyone. So I look at this from that perspective, and I say again, it's just the beginning of that big move.
Yeah, 100%. I think I'll just add one thing to that. I think you nailed it. Even from an investor standpoint, like from a fund standpoint, like if you're a GP or you're invested in a fund as a general partner, maybe you went all in, and this is a perfect example of the timing, because there's a lot of VCs that are stuck right now. Like, they got real excited, things boomed, and the fundraising opportunities and the liquidity within some of these funds has stalled in a lot of cases. So if you were a GP that went heavy into a commercial deal, maybe, and you're now, like you said, you're on the paper cap table, like you're stuck there. If you're tokenizing that, you now could unlock, maybe you took a first position there and you want to unlock some of that. Like, you don't want to you don't want to completely lose your position, but you unlock some of that, because there are a lot of deals that are coming up now that are like, wow, okay, like I would love a little piece of this, but I'm so tied up into this, I'm locked into all these other deals, I can't get out. So I really see that like as just a perfect timing right now, where commercial deals is the perfect example of where they're locked into something like that, and they see other new deals coming up that are really like in some cases distressed properties, etc., where they're able to get in, and move into that cap table as well. So tokenization solves all those problems. It doesn't change if an investment is good or bad. Like, you still need to do your due diligence, as you know, Gene, but like, yeah, I'm excited about how each of these things unlock different participants, as you mentioned.
Life
Yeah,
within
thank
a
you.
life, right?
Exactly.
Please,
So
Ross.
based on your insights, Travis, and based on your experience, what emerging trends do you see in the tokenization, and what other asset classes do you see as a ripe of tokenization?
Well, I think I'll say one that I'm not like, it's me personally, I'm not as excited about, but I've come around. But I think, again, going back to where we need to meet people where they are right now. And I think collectibles is a perfect example of where tokenization is a massive opportunity and a massive win, because, one of our sponsors for our upcoming event called Segment, they're basically building a eBay for Web3 collectibles. And they've set this up in such a way, just in simple form, where you retain ownership of the underlying NFT even when it's fractionalized. So you're able to actually have really a complete digitally native ownership aspect of it for collectibles. So these are things like wine, watches, Pokemon cards, a lot of things that, in many cases have, obviously most of the time don't have any liquidity from the sense of on chain, but they're bringing data in case, like with a watch would have 16 points of data through Chainlink. So you're able to have a real-time data feed for a specific watch with a specific serial number. And that can then, of course, all kinds of things. One, it's verifiable data. You have a better idea of what that watch is worth. You in another part of the world can be much more confident bidding on that watch versus like eBay, where it's just like, oh, you're wondering if that person has good reviews or something, or you're just taking that person's word for it and a couple images. You literally are going to have multiple points of data fed through Chainlink. That's one of the things where the reason I bring this up is the consumers are really already understand this aspect of collectibles. And, my brain always goes more to the real estate and the treasuries and things like that. But like, my eyes have opened up a lot on the collectibles, just because I do see a lot of Web3 onboarding potential with collectibles in particular. And also you don't have all the regulatory red tape. So in most cases, like particularly US, you don't have to worry about that. And really around the world, like the collectibles market is very easily tokenized and very easily, it's not easy to get all those data points, but it is easily tokenized. And then obviously the fractionalization and all the other aspects teach people how this works. So if you learn off a Pokemon card, how likely are you to go invest in a land share real estate property after that? Like, you're highly likely to invest in fractional real estate after you've learned how to do this with a Pokemon card. So I'm super bullish on that. I honestly, like said, it's just not a vertical that like appealed to me as much, but I've come around significantly on this as a way to bring new people on, as well as just the tech that is behind this is quite impressive.
I would like to add, I agree with Travis. I would like to add the following. For me, I would differentiate between banked and unbanked. And what we're now talking about are basically wherever happens within the banked people. But let's look at the 3.5 billion people who are unbanked. And their first money would be this. This is the wallet. This is their money. This is how they come into the financial system. Most of them would just jump over the bank as a concept itself. They don't have banks. They will never have banks. They will have digital wallets. And what Travis says, I absolutely agree with this, but the demand for that kind of products will not just be met from the banked part of humanity, but it will be also clashed with an unbanked, because now we have one medium of financial exchange, the blockchain itself, which basically puts these assets, collectibles, real estate, tokenized icons, tokenized Van Gogh, doesn't matter, to the exposure of additional 3.5 billion people, besides of the fact that it's already exposed to the existing people within the existing framework, right? So it's like even on the steroids, right? So tokenization brings that fractional ownership benefits, but it also brings a new half of the population of the world to that asset classes because they're talking the same medium, right? And this, when you look at kind of this massive transformation, and you say, okay, who would be the owner of your tokenized, painting of 17th century? It may be people who never been banked, and now they're investing and co-investing in, with another guys into the asset which was never been possible to invest before. So I think it's kind of a perfect storm in a good way.
100% agree. Yeah, love that.
Yeah, thank you, Jens. And thank you, Jens, for the great insights. And based on your experience and what we see now, what do you see are the biggest barriers to entry for the new investors looking to get involved in tokenized assets, and how can education help overcome these challenges?
I think partly us complaining about regulatory things hasn't helped, but I think like that's just an aside. But I think many, as you know, you're running many regulatory frameworks for tokenization, even in the United States. And a lot of investors think that this is not even available. And I'm speaking mainly because I'm in the US and I see this all the time, but I think there's a lot of investors that don't realize that this is even possible to do legally. They think they're almost like, like they can't tell anybody, that they're like, oh, I have this, I own this, like, and they're thinking, well, I don't know, like, who's going to knock on my door, in a year or something and ask me how I own this and why I own this. And so it sounds silly, but it's like, that's been a little bit of some of the conversations. I don't think that's the only barrier, but I think that is one thing just right off the top, is that many times they just think I can't buy this because I've heard the SEC doesn't agree with these things, and I think that's a big thing that I deal with almost weekly when talking to clients and talking to opportunities, is how this fits. And clearly there are people that are doing it with a lack of compliance, and that you do need to do your research, as we all know, but there are ways that it's being done the right way. And I think that's the first thing that comes to my mind, because I think that's the most important, is it's literally just turning people away from the beginning, that they just don't think it's something they can do yet legally.
I mean, the current legal, even though it says, okay, this is securities legislation 1934, and the Gary Gensler always refers to this existing legislation of the securities in the United States specifically. And I mean, we all understand the Howey test and how it works, but miraculously, if you take a real estate and you put it at a fractionalize it, the fractions would become securities in accordance to US vision, right? So the building itself is an asset, right? And aligned by the physical object. But when you tokenize it to 100,000 pieces, then it becomes a security. So even though they are very clear kind of what is a security, what is not, I think we are much advanced for that old type of definitions. I mean, even though we have all the answers today, what are the securities, how to tokenize, if it's legal or not, of course, with the sense of regulations and compliance. But at the same time, we do see that the old vision of securities is a bit not enough for today's Rubik way of thinking. But it's just a matter of time. But again, tokenization is possible to do it clearly, legally, regulatory wise. Absolutely, you don't have to hide, you don't have to think double. But it's a complex process. I mean, it's a process. You don't just create a token and call it. That's now my house on blockchain. No, it's not. So it's a bit more complicated than this, but it's possible.
Yeah, I know you guys have spent crazy amounts of money and have lots of legal counsel to get to where you were today. And I think that's one of the things that I always look for in any project I speak with, is do they have proper legal counsel? Have they done the proper due diligence? In many cases, even have a legal or compliance co-founder. That's always a big bullish sign for me, because as you know, like right now, doing these things digitally native is not possible. Like there's not real estate deeds and titles aren't on chain digitally native. In the future, they will be most likely. And that's where you can have more digitally native opportunities based on certain, whatever the regulatory framework is, then that might be a little more easy to have the blockchain rails essentially control it. As that's the future we are looking for. But right now you have to have these Web 2, Web 2.5 businesses, LLCs, other things, as you know, to obviously sew up that connection between the blockchain and legal. And, so it's all being done how it needs to be done. The only thing that's going to change is for investors, they're not going to see anything different than they see today. It's just that Stobox and other companies aren't going to have to spend, 30% of their revenue on legal aspects because, some of these things will be digitally native on the rails that will be defined and a lot easier to do. So yeah, I'm excited about that. I think the future will continue to pave a digitally native path.
Yep.
Exactly.
Yep.
Thank you a lot. I personally think that a big gap also for onboarding new investors, it is education, right? It is the critical part of the whole ecosystem. And thank you for the Travis and for RWA Builders for the contributions to the industry, for promoting their tokenization to target different audience that will be then onboarded into their industry. And finally, looking ahead, what is your vision for the industry in the 10 years? And what impact do you hope RWA Builders will have on this transition? And you can please feel free to share more about your current activities and your focuses.
Yeah, appreciate that. Thank you. This has been an amazing chat. And obviously we've all seen the projections by McKinsey and different companies out there, some of the best data research companies about the future of tokenization. They range anywhere from $2 trillion in the next 7-8 years to 16 to 30 trillion. So there's a big range of what tokenization, like the future trajectory looks like. My personal opinion is, we're going to see more than 10 trillion of assets tokenized, by 2030. And again, that's just more kind of spitting data. But I think that I'm seeing the demand and as you mentioned, just things that I'm up to with RWA Builders and RWA Day, very active, talking to the traditional side, talking to the tech side, and even doing IRL events that we're doing RWA Day at the Permissionless Conference in Salt Lake City, Utah, October 8th. So that's a place where we're going to have about 200, maybe even a little more, traditional finance from the allocator side, asset managers, fund managers, to tokenizers, all there with roundtable sessions and really short, punchy keynote type of talks, very actionable, very focused on getting results and kind of getting a 0 to 1 result for each of the attendees. And that really kind of just transcends all the things I plan on doing in the next 10 years. It's just really about connecting with people like yourself, projects like what Stobox is doing, and people that are the trailblazers that are continuing to put this forward, because the education aspect, as you mentioned, Ross, and all of the product side, as you mentioned, Gene, earlier, all of these things will intersect and bring people together. So I want to be that glue that continues to be a distribution model, be a way to gather people together and help move the needle forward for specific projects as well as just the industry as a whole. So yeah, I'm super excited about that. And I think last thing, just from even our last segment, I think one of the things that's important for this moving forward is, and you guys are doing this a lot with your Stobox 4, is like a Fireblocks MPC type of model, because I do think people do need much more security. When they start, because buying a fraction of a Pokemon card is, again, maybe it's just an example I like using because it's kind of funny, but it like that isn't as big of a impact. I mean, obviously some of those Pokemon cards are probably worth more than I'm giving them credit for, but people worry about losing all their money. They hear about it all the time. They hear about hacks. They hear about these things. And I think the custodian aspect are conversations that I'm having with institutional aspect. Institutional is immediately going to that direction, but from consumer side and getting that Web3 adoption, we need what you're building at Stobox. We need other people doing this. We need people understanding how to use cold storage, hardware wallets, etc., to be able to control their funds, but also in a way where it's stable and they feel comfortable, they can sleep at night. And even for the less, tech savvy, we always hear about, onboarding our grandmas. We've got to get people that are able to, do this and feel comfortable putting their assets to work for them, because you're not going to get bigger purchases. You might buy one share of fractional real estate, but you're not willing to buy 50 or 100 because you're worried what happens if my wallet gets hacked or if I lose the keys or whatever. So I think that's continuing to be a thing that I am a big advocate of, and I work closely with a lot of the wallet providers, custodians, and that's one of the big passions I have is how do we continue to make this a secure way that is safe for people to stay committed to crypto and blockchain.
Thank you, Travis.
I would also add that I look at the different numbers, and as you perfectly mentioned, some sites 3 trillion, somebody says 30 trillion, somebody 10% of the GDP. But again, being in the market for the past 6 years, I don't think any of these numbers all of them are guessed, right? Educated guess, more educated or less educated, all of them are guessed. What I'm absolutely sure that this is a trend, first of all. So let's not count trillions, that's not ours. One day we'll be there. That's the first point. The second point is I'm sure that whatever is being counted on the existing asset types. And I'm sure tokenization will bring new asset types that have never been in the market, like personal securities, right? How would you evaluate yourself as the commercial human unit, right? That actually progresses in time and generates wealth. It's not on the financial map today, because we look at the businesses as the company from the company perspective, but not from a human perspective. I mean, there's a lot of concepts that we're working on, like tokenization of time, so on. But what I want to say is that this is the direction, and within that path, definitely we'll see some new asset classes that have never been invented, will be invented. So that chunk of that potential capitalization of the market may well be from the newborn assets, as well as the old CeFi assets being transferred to the DeFi infrastructure. So that's absolutely amazing industry to be in at the moment.
Yeah, I love that. I know we talked about this separately in the past, but like the derivatives market is like, the capital markets, like overall, like say 700 trillion, including real estate. But the derivatives market, like you mentioned, time, all kinds of other derivatives that will come out of this. I mean, you have things like Polymarket, you have all these different things now, all these derivative ideas, and that's at least 3x the size of the normal market minimum. I mean, the ideas are endless. So yeah, the future is very bright for this as we continue to have more people comfortable with tokenization and getting on board. The derivatives market, I think, will probably outshine a lot of the regular markets.
I think that's a very positive note to make a pause. Ross, please, I'm stealing your voice.
Yeah, thank you, Jim. Thank you for your thoughts. Thank you for co-hosting. Thank you, Travis, for being here. Thank you for your valuable insights for our listeners, for the followers, for the professional market players. And thank you for your energy. Guys, please follow RWA Builders website, where you can find a lot of insightful interviews with market professionals. Please find the link to their Twitter account of the RWA Builders. And also you can find in the description rwa.day, the website about the offline event in October organized by Travis.
Thank you very much, gentlemen. This has been an amazing conversation.
Thank you,
and
Travis.
Please find
Thank you,
that
guys.
iron for my. Thank you. Find the iron for my shirt. Thank you.